Sticker or something.
You would get the card for my mini camera, okay? For my little mini cute camera, my mini pink one. You know, the mini one that is on the ground charging.
Okay, folks, I'm showing that we are live here on Quantum Leap on February 2nd. I have my production assistant in the background. You might have heard her, Carrie. And we have a guest here who is an expert in, in the mortgage business and really offers a lot of interesting and unique products and services and a real high level of service with a kind of a smaller shop, not one of the bigger brokerage houses, but still can match any rate. And her name is Leslie. How do you pronounce your last name, Leslie? Just
Aberle. It's a tricky one. It's Aberle.
And but before we get to Leslie, let me just check in with my co-host Cory. How are you today?
Oh. Hey, David. Good to see you. Doing great. How about you?
Oh, pretty good. Just fighting here with the 5-year-old with my hand that's not on the mic and trying to keep her in front of her class. But the good news is she is going back to in-person learning soon. So there's kind of a light at the end of the tunnel. But, yeah. But with that, let's, I did want to give a brief intro to Leslie, and we will have her tell a little bit more about her story. But she works for Napa Mortgage, which has over 20 years in the industry, and they're a full spectrum brokerage house, cover everything from pre-approvals to finance, refinance, reverse mortgages, VA loans. And she can tell you a bit more about some of those products or what are the key services. But really what sets them apart is their unwavering dedication to their clients and really the uniqueness of their shop, being a growing shop out here, brokerage house, pardon me, puts them in a unique position with some of the great clients that they've served out in the Blackhawk area, Sonoma, even Sacramento, so all over the Bay Area. And I'm going to let her tell you a bit more and turn it over to you, Leslie, to just introduce yourself and tell us a little bit about your story and your business.
Yeah, thank you. Yes, so I am the business development manager here at Napa Mortgage. I grew up in Vacaville, which is the small town between San Francisco and Sacramento. Had an amazing opportunity when I was 19. I lived overseas in Italy for 4 years, and that's where I worked towards my business management degree at the University of Maryland. Got to do some traveling while I was overseas. Came back home, and I've done management for over 10 years now. Lived in Sacramento for a good portion of that time, and now I'm back here in Napa Valley, and that's when I joined Napa Mortgage as their business development manager.
Excellent. And I know we talked a little bit about this, and Cory and I have kind of a unique interest in economic issues and, also some politics and the ramifications. And we just see a lot going on right now in the housing market, in the mortgage business. And, we have the new Biden administration. So I just wanted to see if you could just give us a little bit of the context of what you see going on in the mortgage business right now. And in particular, now that Biden is coming in with all that's going on in politics and the economy, what that means for that mortgage business.
Yeah, so right now, as many people know, rates are low. We're hearing it all the time in the news. Rates are low, rates are historically low. Lots of people are taking advantage of that refinancing, not only just refinancing, but adjusting the terms of their loan, going from a 30-year to a 15-year. They want to pay that loan off, sooner with a much lower interest rate. So that's a big thing that has been going on in the mortgage industry right now. Another thing that we're seeing, of course, there is the new administration coming in. We're seeing a lot of optimism. A lot of things are pointing to the growth of the economy. People are excited. There's a vaccine. We have the new administration. So there is a lot of optimism right now in the economy. However, we are a global economy. So we're not just affected by what happens in our economy. So other countries will not have an opportunity to have access to a vaccine as quickly as we might, or who knows when, and unfortunately, due to COVID, a lot of other countries, their economy hasn't been able to bounce back in a way that ours have. So due to that, there is the domino effect from their country to our country's economy. So what we're kind of anticipating and expecting is that the mortgage rates will continue to stay low. And that's due to the index and the treasury, everything goes hand in hand and affects each other. So we are optimistic and thinking that the rates are going to continue to stay low.
Great, and which means that the time to take action is now.
Yeah.
Before, that things could change, in the future. So, with rates at historic lows, really, do the refinancing, look at those second homes and everything that, to take advantage of those low rates.
Absolutely.
I was just curious, and we do tend to look at this for several different businesses, just about how you guys are adapting to the COVID-19 environment, and also within your business, but also within the broader, housing sector in terms of how you guys operate.
So for us, we're fortunate in the sense that everything for us can be done online. We can work with our clients, we can work with our processors, our escrow officers. Everything can be done online, which again, we are very fortunate about that. We personally prefer to meet with people in person. We like that one-on-one with our clients. We want them to know there's a face behind, the name. However, we can't do that right now. So again, very fortunate. Everything can be done virtually for us, but we did also, of course, like many other companies and businesses, we had to figure out, how do we survive, the initial shutdown? How do we continue to thrive, get our name out there, bring in business, So for us, there was a big shift. And me personally, I had to look at, how can I continue to get our name out there? How can I continue to promote us? And so we had to get very creative, a lot of social media posts, a lot of Google interaction to drive up our SEO. And fortunately, that was very productive. And we did see a good, return of our investment on those things.
Great. And I actually visited with you and some of your colleagues out at the Blackhawk networking meeting that you go to. And I just really saw a kind of a good vibe of the network that you and your business have created. And a lot of that comes down to trust and the things that you make people feel valued and, go the kind of extra distance for your clients. Could you just talk a little bit about, I know you might have mentioned an anecdote that you had earlier that kind of exemplifies that, or just kind of the difference in the personal touch versus a more kind of impersonal brokerage house, so to speak.
Yeah, absolutely. I'm actually really excited to share this information. I wrote this wonderful scenario that I'm really excited to share with everybody. So, and again, to reiterate, we are brokers, we are not a bank. And so that's definitely something that sets us apart. And I want to share this with you guys. And so as brokers, we can manipulate the interest rate, and we can do that in different ways that meets the desires of each individual. So how can we do that? So we can buy down a rate, or we can cover the closing costs. And the subject that comes around the most in the mortgage process, and it's no matter who is involved or what the transaction covers, is the discussion of closing costs. So most buyers or refinancers want to have a no closing cost loan. And this is a process that has been widely accepted as a good thing, but it does not necessarily help the consumer. And so I want to explain why. And so I drew up a scenario. And so let's say we have somebody with a $500,000 loan amount at a 2.625 fixed rate for 30 years plus closing costs, versus a 2.875 with the bank covering your closing cost. So when a consumer walks into a bank, they generally see the two types of rate examples in the bank. The first is called the interest rate, and the other is your APR, or your annual percentage rate. And the APR is the interest rate plus an amount above that, which covers the closing costs such as title insurance, escrow fees, government recording, etc. So in this $500,000 example, at the 2.625 fixed rate for 30 years, the average cost of closing is $2,700. So the same loan amount at the 2.875 would have no cost for closing and might actually have a cash back of closing of up to $500, which sounds like a great deal. So the 2.625 would be the interest rate and the 2.825 would be the APR. The difference that is rarely contemplated here is that of the monthly payments. So at the 2.625, the monthly payment is $2,008, while the payment at the 2.875 is $2,074. So every month that's a difference of $66. However, on a 30-year loan, over the course of 30 years or 360 months, 66 times 360 equals $23,760. So the concept of paying closing costs wasn't originated by financial institutions because they want to do a favor to clients. It was done because if the bank gives a slightly higher interest rate and pays the $2,700, they make a return on investment capital of 880% in this example. So another way to look at it is if the borrower paid their own closing costs, they would have saved $21,060 over those 30 years. So most borrowers don't look at it this way, and they may have their own reasons why they don't want to pay closing costs on the loan. And banks, they're not going to fight you on this. They're not going to provide an example of the math that I just did and why that's a better way to go. It's not in their financial interest to explain the math, especially in times like these. So in today's markets with the rates this low, it's highly unlikely that the consumers will ever need to refinance. And so that then almost guarantees the bank that the aforementioned rate of return on paying the closing costs with the sale of the APR over the interest rate. So for us as brokers, we don't hold the mortgage in-house to collect monthly payments servicing the loan like a bank does. The bank intends to hold the loan in-house and service the loan, earning revenues from the interest rate. So as brokers, we don't get paid more or less based on the rate, higher or lower. So our job is done when the loan funds. And so as a result, we have a desire to educate borrowers on the differences between the two examples that I mentioned before. And that just kind of goes to our customer service. That's our main priority for us, is taking care of our clients. You know, we're dealing with their finances, we're dealing with their money, and that's a huge trust that they're putting in us. And that means everything for us. And so any chance that we can prove to them our integrity and our credibility and putting their best interest at heart, that's what we do.
Great. And I'm curious to get Cory's thoughts. I'll turn it over to him with this. And that, you know, I've always been more comfortable with the smaller businesses versus the bigger banks. So I think the level of trust and financing is so key in deciding who you work with. I don't know if Cory, if you have any thoughts on that. It's nothing against the bigger banks like Wells Fargo or B of A, but I just don't find them to be as competitive based on my research and experience, or as good to deal with. But
I have mixed feelings about it. I think in terms of banking, I like having a local community bank. I've always felt the same way with mortgages and so on. And the one thing I do like about sometimes with the big banks and why I do keep an account with the big banks is sometimes they just make it easier to access things. And, so it's good to have a balance of both, I find, if you can maintain a balance. But when it does come to mortgaging, I prefer to have somebody local I can refer to. I remember referring my sister to somebody over, not Leslie's chapter, but another one in Danville, largely because I knew, the woman really well, and I knew she'd take great care of my sister who had some pretty unique needs. And they managed to take care of it. It took a little time, because those things do and those kind of processes, but it's always good to know the right people for the right fit. And you don't get that with the big banks. You just kind of get whoever they throw at you, and that person may be gone in a month, as they
Yeah.
move up the chain, or they change jobs or whatever, or there's a mass layoff. But in the mortgage business, you can have a relationship with somebody if they're local. And I think there's a style for everyone too. I'm the type is like, you just go do it. I don't need to hear from you. Ask me, give me anything I need to know, but I don't really need to know a lot, right? I trust you guys. Whereas some people, they need that handholding, that constant. So
I would just add, Cory,
anyway, I don't want to get too far into that, but that is kind of my opinion of having local mortgage brokers. I think they're so valuable, and why I only refer to people. That small business framework. What were you going to say, David? Sorry.
Oh, I just had a quick comment that I just find that given our networks and things, that it's more useful to actually find people who, if we refer folks to them, they could refer people back to us, whereas the big banks are never going to refer. If I refer people to Wells Fargo, they're never going to say, hey, thanks, Dave, we're going to refer our video business to you. So I was thinking it's best to refer people.
Yeah.
And sometimes though, with the big bank, if we have somebody in say BNI who represents one, we want to build that relationship. And again, it may work for some situations, but for most part, I'd rather go local. And I think that helps all of us. So Leslie, speaking of that, so who makes an ideal client for you? Who do you really like to help?
So for us, we're really fortunate. We're all licensed throughout California. So we've done business NorCal, SoCal, Central. We're kind of all over. And for us, what we're really kind of focusing on right now is refinancing, as I discussed. Anybody who hasn't refinanced in the past year, who could really take advantage of the rates. I always try to ask, I'm listening to people if I'm hearing that, they're struggling to make ends meet. Are they having hard times paying the bills? So many people are struggling right now. And I'm like, well, are you a homeowner? Have you refinanced recently? Let's get you some extra money in your pocket. Let's help you out. Also, reverse mortgages have been a big trend for us that we've enjoyed helping people on. It is in more of a niche loan, just in the sense that you do have to be 62 years or older. You do have to obviously have a home, and it needs to be your primary residence. But we have helped so many elderly people be able to cover medical costs, pay their energy bills, those types of things. So for us, it's actually kind of been a bit rewarding that we've been able to help these people in these situations. And then another thing that's kind of a trend that we're seeing, but has been an ideal client for us, is there's a massive exodus going out of the cities. Everybody's wanting to get out of the cities and have some more space. We're all stuck at home and working from home, and we have kids, distance learning, and people need more space. So for us, we can do pre-approvals, and that is just so much more enticing to the sellers and the realtors when someone comes in with that pre-approval.
And so what would you say makes your firm unique? I mean, there's so many mortgage companies and brokers, and well, maybe David and I know a lot of people, I guess. But so, what would say really makes your firm stand out?
For us, it's just our dedication to our clients. We know that without our clients and their trust in us, there is no Napa Mortgage. We don't have a business. So for us, that means everything. When a new person calls us and reaches out to us, we take the time, we really get to know them, and you get to know us. It's not a very one-sided relationship. We really do cultivate and develop that personal relationship. And we're not a bank. We have our phones on us for better or for worse 24/7. So we've had clients reaching out to us on a Sunday morning, and we answer. The mortgage process can be very convoluted and confusing, and we want to take that burden on for our clients. We don't want them to feel that frustration and stress. Let us do that. That's our job. So for us, we really want people to understand we are here for you. We will take you through this process as much as you want us to. And, there is a face behind the name. It's not just a sterile company. We really have a heart, and we really, truly do care.
Thank you, Cory. I would just had a quick follow-up question about pre-approvals. Given that the housing market continues to go up, that there's a lot of people are saying, well, how much longer am I going to wait? So could you just talk about kind of what a pre-approval is, and why you would want one?
Definitely. So a pre-approval is basically getting the loan process started. I don't want to say on a superficial level, but it's not delving as deep into actually getting all of the information and really going through and processing the loan, locking an interest rate, those types of things. But it is getting the general information so we can find out how much are you going to qualify for? What is your rate going to be? What is your monthly payment going to be? And what is so enticing about that to sellers and the realtors is they now know, you're serious. You've begun the process. You do qualify for this home. You're not going to hit a hiccup and get denied during this loan process, which now then they have to potentially go back and find another buyer for their home, which can just prolong the process. So it shows serious intent to move forward to buy to both the seller and the realtor.
Excellent. Well, thanks, Leslie. I will put a little bit more on your bio and the links to your business in the comments and for the video. And we appreciate you coming on to give us the latest on the mortgage market and why folks should look at Napa Mortgage when they're looking at making a move in the mortgage market, real estate market. With that, thanks, Cory Nott, and I'm going to close this out there.
Thank you.